Hey, it's Jason Coleman, your favorite celebrity loan officer, self-proclaimed. I'm here with my friend Juan Grimaldo of KDub.
How you guys doing?
And I paid Juan a few bucks to come over and be my friend today.
Yeah.
Thanks for taking my money.
You're welcome.
Hey Juan, you just received, I saw on Facebook, an award from Keller Williams as a platinum producer. What's that all about?
It's about the units, and we sold quite a bit of homes last year. We're very thankful. We're grateful for all of our past clients and friends, referrals, for that opportunity, because it was all thanks to them.
Well, the award looked pretty shiny.
It was pretty cool to receive it. I was, yeah.
I was like, why am I paying this guy friendship dues?
He didn't, by the way. Full disclosure.
So, hey, today I want to talk about ways to come up with down payment versus down payment assistance. So when I look at down payment assistance, I'm thinking, well, the grants that they offer usually charge a 0.5% origination fee, and the interest rates are usually around 2% higher than just coming up with your own down payment.
And we get this a lot, Jason, because people want to see, okay, I'm a first-time home buyer. I heard about the first-time buyer grant or benefit. And honestly, from the bottom of your heart, what do you think? Is it a good thing? Is it a bad thing? What are the pros and cons of those programs?
There are some scenarios. I ran across a couple who were not married,
okay.
and she had the money in the bank, he had the income. But she didn't want to throw down her money because they weren't married, and he wasn't like matching her. So they went down payment assistance.
Okay.
And
so it makes sense for some reason. So for some people, right?
For some people, it does make sense. But if you break it down and you want to build equity quicker, and you want lower closing costs, and you want lower payments,
you go with your own down payment.
You go with your own down payments. Now, what are some ways that you can come up with down payment? So I recently came across a couple that tapped into their 401k. Now, what's cool about tapping into your 401k and what's not cool? Well, if you tap into it, you're cutting your reserves out and, cutting into your retirement plan.
Definitely.
But say you have a lot of debt and you can borrow from your 401k, pay off those debts, qualify easier, and then the payments that you're paying back to yourself don't count against your debt to income ratio.
Beautiful. So and then when you're paying your 401k, you're basically paying yourself, right? So it doesn't really, it's a good thing. I mean, you might be tapping into your investment, but you're also a home. It's not an investment right away, but it will be an investment in the future, definitely.
Right, so if you can get the lower interest rate by leveraging your savings. Now there's some other ways you can get gifts from relatives. You can sell a vehicle as long as you can show ownership and do the bill of sale. There's just a number of ways you can come up with that money. You can get on Craigslist and buy things and sell them, get things for free and sell them.
Yep, there's actually, we had a client who had some music equipment or audio and video equipment and sold it for his home, and it was, it made it happen. So that you can get creative, and that's why you want to have someone like Jason look at your situation, give you some ideas as to what you do. Typically, if you go to the bank, you don't have those choices. I mean, it's pretty much, it's black and white.
Cut and dry.
You don't.
Yeah, one or the other. And we're trying to get resourceful to help you figure out a way to happen. So
definitely.
I thought the 401k thing with not getting hit with the DTI on the paying yourself back was...
What is DTI? Because you know what it is. We do it all the time.
Debt to income ratio.
Right. So let's give an example. Let's say I want to buy a house and I say, you know what, Jason, I have the down payment, but I want down payment assistance. I don't want to use up my money because I want to buy some furniture when I move into the house. What do you recommend? And what would the rate be if I go down payment assistance with the conventional loan?
So I say rate depends on your credit score. It always does. You have to have at least a 640 credit score for most banks to get down payment. There are some 620s out there, but you're gonna have to dig deep.
Right.
And it's gonna be a little tougher to get done. Now, you never really wanna go above 50%. The ratios are set at like 43% debt to income ratio, but on paper it looks good at 43, but sometimes you can't include your spouse's income for one reason or another. Maybe the credit score is too low. So sometimes you do want to manipulate the debt to income ratio up to 50%.
So there's a lot of restrictions. As when you get down payment assistance, your qualification goes lower because there's more costs involved in the loan. Means that you're going to have to pay more. Your payment's going to be higher, so you qualify for less of a home, correct?
Yes, exactly. And then you take that higher interest rate and you're going to be building equity slower. than if you come up with your own down payment. So let's say, 4% rate with your own down payment or 6% rate with down
That's what I
payment
wanted to
assistance.
get. So 4% versus 6%.
Yeah.
I mean, I think the choice is pretty clear. Obviously, if you can't purchase, the only way you can purchase is with the down payment assistance. That's what they're there for. They're there to help people out that need that assistance when they don't have the down payment. But if you can, again, it'll depend on your situation. So I think at the end of the day, our conclusion is neither good or bad, right? It's depending on each situation.
I always say scenario because situation's a negative connotation.
Or scenarios. Okay. He's got the grammar.
Well, I don't know. Somebody just told that. That's always stuck with me for a long time.
that's good.
I always say scenario, never situation.
Beautiful.
So, hey, we're gonna touch on payments next time, and we're gonna go through the process step by step over a series. And I hope you guys will continue to watch. So, thanks for tuning in today. Our numbers are right there.
Thank you so much, guys. Have a great day.
We'll see you next time.
See you.